In a city full of new towers, South of Fifth remains the one neighborhood where scarcity still controls.
This is the 2026 Q1 report for the South of Fifth condo market. I'm David Siddons, this is our territory manager, Stefania Cambarau, and for the next 20 or so minutes, we're going to dive into everything that you absolutely need to know about what's going on in the South of Fifth market today, with an expansive view further up into the Miami Beach area, because South of Fifth is the trophy neighborhood for the whole of Miami Beach. You are the expert within this market and you've been deep diving. This video goes along with the report that you've compiled covering what's happened last year and Q1 of this year as we move in. And the overwhelming kind of view is that we're dealing, as we are with all markets, with two very different economies, two very different systems running under two very different economic cycles. I want to start broad and then we're going to get narrow for the audience so they can start to really understand what's going on. The first thing I want to talk about is that first most important index point to understand the dollar per square foot. And on two sides, we've got the luxury product and then we've got the rest of the market. Take us through the top end of the market, that ultra luxury project working in a different economic cycle. What are those buildings and what are they selling at dollar per square foot?
So as you know, South of Fifth has seen probably most of the migration of the wealth that is coming from different cities in the US. And this has brought to a situation where those condos, Continuum, Apogee, Murano e Portofino, and a few others, boutique ones, are seeing averages more toward the 3,400 per square foot and ceiling number up to 5,000 per square foot. We have an outlier in the neighborhood, which is more of a boutique condo that sold at 6,000 per square foot. So these are the numbers that we're experiencing, and needless to say, it's all due to the different influx from these cities.
And South of Fifth is probably the most sought after quadrant of Miami Beach. It's only second in terms of price per square foot to what we find up in Surfside with buildings like the Four Seasons, which is a whole other stratosphere, which has now hit ceilings of 8,000 a square foot. This is another market that you deal with, and there's another market that we'll follow, but we'll talk about that market. But staying South of Fifth, the dollar per square foot doesn't tell the whole story. One of the things I'd like you to share is your observations when it comes to how long it's been taking to sell this product, and as a result, how these sellers have actually been pricing the product through the last year and how they're pricing it this year,
yes,
and whether they're in line with the market or whether they're out of whack. And we have an interesting story I want you to share,
yes,
in terms of a product that we actually sold ourselves that we did in a totally different trajectory.
And that's the example of the Apogee condo. If you look at the report itself and you look at the average days on the market for that building, you'll see that the average is 400 days on the market before properties trade,
right,
on average. What happened here is when we brought the unit to the market at the real value, and exactly at the building averaging around the 3,400 per square foot, that is the price that was achieved in a week and a half. That unit was sold in a week and a half, which is why the average, by the way, goes to 400, because units have sat on the market for over 1,000 days.
Right. You're citing one unit on the same line that was sold a number of floors above our listing, and that had been on the market since 2022. It had been on the market for more than 1,000 days. So we went from 1,000 days to 10 days.
And that was not because the product was not desirable, it was just because the product was not priced correctly to begin with.
So that begs the question, has lessons been learned in this luxury market, or are we seeing sellers right now pricing well above what they can realistically achieve?
So when we look at the difference between listing price and selling price in South of Fifth, we are averaging about an 8% difference between the one and the other. But then when we look at expired listings, which is what doesn't trade and keeps on not trading, that difference with the listing price and what actually sells in the neighborhood is up to 30% difference.
Yeah.
So between 20 and 30% difference between the value of the property and the way this property is.
And that's too much of a delta to achieve if you're trying to sell a property. If you're listing that much above what you really realistically or quantifiably can achieve on the market statistics, you're simply not going to sell. We took a look, actually, as this is partially including the Q1 data as well, that right now if you go into South of Fifth and you look for properties to buy, condos, you'll see I believe it's 18 listings over $3,500 a square foot.
Yes.
Now, to put this into perspective, over the last 6 months, we saw 3 sales above 3,500 a square foot. Those were all at Continuum, 100 South Point. They were all incredible units, and they were quite exceptional. And they sold, one sold at 5,000, another one sold around 4,000 and change, another one was 5,000. And then obviously we had the 2 Apogee units that came in place 4 and 5 at $3,400 a square foot. With so much product coming out over $3,500 a square foot, asking, and a lot of expired listings, what's the message for the market?
It's clearly that in a dynamic market where you as a seller can sell very well at a great price, some sellers are just fishing way too high, and that's what becomes just very long, and that's what makes just very long days on the market, and it's just not needed.
One of the other elements, one of the key index points that we always cover is months of inventory. How much product is available? Now, typically, when you see days on the market be very, very long, it's usually because there's very, very highly priced or a lot of optionality. Do we have a lot of optionality south of Fifth?
Absolutely not. That's, as we said, is still a market that is very scarce for the level of the demand. Month of inventory is now at around the 12th month. And again, this has to take into consideration all the other factors, but it's coming from the previous year of 18 months of inventory.
We've obviously covered on the situation with the inventory. There isn't a lot of the actual product because there's only really 3 luxury buildings to consider. This it obviously feels like, and the way this conversation is going, is much reflective of what we've seen in other markets. So I'm just going to frame for the audience very quickly this systematic experience that we're seeing within our market based around economic cycles. Miami is now very clearly defined by 2 types of economy. The general real estate economy for general product, which is where we see a lot of investor class product, we see a lot of rental product, a lot of second and third home product. On the other side of the coin, you've got the primary driven, relocating, very ultra luxury wealthy buyer who's now moving in to make Miami their home. And these 2 different groups of people have created 2 very different economies. On one side, we see this general market, which is bubbling along and seems to be okay, but it's not making any real waves. What's getting the attention and what's really drawing everyone's awareness to the ceiling rising is the incredible movement velocity of not just the amount of product at the luxury sector, but the new ceiling dollar per square foot that are being achieved, typically speaking within Miami. Now, south of Fifth doesn't have some of the attributes of other neighborhoods with a lot of new development coming into that market. So what I want you to unwrap for us is the buyer and seller psychology. What have the buyers been looking for? What's causing friction within the south of Fifth market? What's giving opportunity in that market? And then how is that marrying with the seller psychology?
As you mentioned, when a buyer is coming to Miami and relocating with their family, and it's an high net worth individual, they are most likely looking at several neighborhoods. So they're not necessarily discretionary. They don't want necessarily South of Fifth or necessarily Bar Harbor or Surfside. So with that said, the newest product is now located in other neighborhoods. We have seen a lot of new construction, luxury new construction in Surfside and Bar Harbor. We see more towers coming out. Those are the ones that are achieving record pricing of 5,000 per square foot and up. While south of Fifth didn't have a new construction in the actual perimeter. We just saw the 5-park condominium at the edge of south of Fifth achieving incredible numbers in resale. Those top units are selling very well per square foot, and these are increasing the appetite for, and actually increasing the higher price per square foot for the whole neighborhood. Yeah,
and the ceiling too. There's actually 3 pending sales right now at 5 Park that are all around, they were asking, what they're selling for we don't know, but they were asking around $15 million, which represents the 3 most expensive pending transactions right now, if you want to call it that, within that south of Fifth quadrant.
Correct, because of course what you have in south of Fifth is that community that you just don't build in 1 year or 2. That is something that you build in decades, which is the reason why a lot of buyers decide to go for that specific pocket, which already has the community, which already has the retail, the walkability, and exactly the sense of neighborhood that you don't have in other places where you have luxury towers rising at a very fast pace.
That's a very good point. to mention that the relocating buyers' wants and needs, and one of those wants and needs is community in a good neighborhood, good restaurants, walkability, community. South of Fifth has that, but with only 3 or 4 buildings to choose from, it obviously puts all the emphasis on those particular condos.
Yes.
But it definitely is a consideration for a lot of people coming here. What they're not matching is when you see buildings like the Four Seasons, which we just had a sale at $44 million up there. That building's actually continuously expanded. There's 2 more new towers that have come up, but their dollar per square foot is really ranging between $5,000 to $8,000 a square foot, which is what that new
which makes it another animal altogether. And the newer towers like Delmore project or the Rivage project that are going to be charging those numbers as well.
Those are important to mention because, again, those are part of that conversational play that we have with buyers who are coming in, who have looked at South of Fifth, but they've also considered the new buildings like Ocean Terrace or Paragon, which is under construction now, or Rivage, which is under construction, or the Delmore. Those are the real players in the market. The South Beach market kind of, I don't say it's a void, but it's skipped at this level, at this high frequency. It doesn't even come into the conversation.
And in South of Fifth, just in the last 12 months, we have seen 12 sales above the $10 million. Mm-hmm. And that number, just the 12 months before, was only 6 sales. So this is an increase of a 90% of sales in the $10+ million sales in the neighborhood. That already tells you a lot about it.
Let's very quickly talk about what's actually selling. Let's talk about the product. Run me through the key buildings that we need to be aware of in the luxury market.
So let's start with Apogee. Very little on the market, just 1 unit for now. We go off market all the time for clients. 01 and 04 is what people want. Those are the corner units. Great scarcity and great product to look for. Next, Continuum. Between the South and the North Tower, several units are now on the market. It's a healthy number, 16 units on the market. The ranges between 2,600 per square foot all the way to 5,000 per square foot. There is a profile spread in this building, so there's opportunity to be made. There's a remodeling coming up, just started. It's going to last a few years. And some of those owners might be more motivated than others. Similar situation in Murano at Portofino, 1000 South Point. Undergoing a renovation right now. It's going to look amazing, very stable long term. However, some of those owners might be more motivated, currently 10 units on the market. So great opportunities for buyers still there. It's a neighborhood that long term is very, very strong.
We've obviously highlighted the darlings of the neighborhood, but let's be clear and get into some of the troubled areas. What's the trouble spots, the trouble product that consumers need to be aware of, actually both buyers and sellers?
Trouble spots are those older buildings that just need a lot of work, it's mostly rental product, and they are not going to appreciate. What else is a trouble spot? Those are boutique buildings, luxury boutique buildings. However, they want to be the continuum of the neighborhood, but they are just very high maintenance fee and they don't offer what the amenities that the other luxury condos offer to the buyer.
And then I guess finally you were also mentioning actually earlier about those buildings that sit on the peripheral edges that are selling, they aren't transacting very well, but they're just not, don't expect them to massively appreciate. Correct. So old stuff to stay away from that's got massive assessments. Buildings that are luxury buildings trying to compete with Apogee and Continuum, but they've got higher HOA fees.
So those are good buildings and they're not bad ones, but just need to be priced accordingly.
They're not priced right, so that's again just a case of pricing. And then finally those buildings which are ticking along on the edge like Icon and Murano Grande, which again are popular and they're selling well, but just as long as you recognize you're not going to get massive appreciation. That kind of covers most of the market conversation. Obviously external forces, we're aware that all of Miami, we now consider what interest rates are doing, insurance costs, new developments, migration patterns, and economic shifts. New development seems to be very important and an affecting force within the South of Fifth market because it doesn't have any, and now it's got to try to compete against some of this new brand product that's coming out through Miami. But the short-term outlook, are you positive for the South of Fifth? Where do you see the market going for the rest of the year?
We always see growth and then a pause and growth again. Sometimes buyers just need to adjust to the new rates, right?
Yes.
Not talking about interest rate, I'm talking about actual pricing. and then we see another growth. I am very positive for this neighborhood. I do see another growth happening very soon. And again, remember, it's not the whole market, it's specific product that does very well, specific product that does very average.
Okay. What you highlighted there, which I'm actually really glad you did, was you highlighted very clearly the two economic cycles that are play. One economic cycle is that classic boom bust cycle, which oscillates, and typically we see it with rental market and investor class market. On the other side, you've got that very, very strong ultra luxury market, which now is growing, pausing, growing again. Then there's a process of repricing, which happens when people are too aspirational according to their numbers, which maybe is the stage that we're in now. We had this growth, we had this pause, we had more growth. Now there's this repricing where prices come adjust off the resale product at the luxury level. And then we see growth again. So it's simply a step up. There's no drop in this market. There's no correction. This is just stability for the moment, expecting to see a new jump coming soon.
And you know better because you analyze different neighborhoods and you know very well the ones that have those indicators like walkability, community, and Coconut Grove is the one that I know you love.
Absolutely.
And you know that grows tremendously all the time.
Classic micro pockets in full operation within Miami as a whole. We're going to finish off with a little fun thing that we do, which is like the top 10 questions. Breaking the ceiling or staying under the ceiling?
Breaking the ceiling.
Local buyer or relocating buyer?
Relocating buyer.
Buyer's market or seller's market?
Buyer's market.
Luxury market or mainstream?
Luxury.
Standard cycle or hybrid cycle?
Hybrid, 100%.
Holding or pushing forward?
Holding.
Primary buyer or second home buyer?
Primary.
Best in class or room to improve?
Best in class.
Best buy a condo investment, resale or new development?
Resale.
Realistic or overconfident?
Overconfident.
Cash or finance?
Cash, 95%.
Low inventory or ample inventory?
Low inventory.
And that concludes our Quickfire question. Hope you enjoyed this video covering the Q1 South of 5th market. If you are looking to buy a condo in the Miami Beach market, this is the expert. Please go on, read the report, click a Calendly appointment and speak to Stefania. She will tell you exactly what's going on and what you should buy. If you are a seller, we clearly have success in this market.
Yes.
That Apogee sale, we did it in 10 days. We know how to sell this market. We know how to analyze this market. Again, please click a Calendly appointment, book a call with myself and Stefania. We'll walk you through it. We'll price your product. We'll tell you exactly how we market. Hope you enjoyed.
Thank you, David.
Thank you so much, Steph. Always a pleasure. Absolute master at what you do. Thank you for watching, and please watch the rest of the 2026 Q1 reports where we detail what's going on in every single Miami and Broward market. Thank you.
Thank you.